we're microdosing the Fed's credibility because the Fed is about to also go live. That's why we jump started this by 5 minutes.
Yeah.
5 minutes to 2, because the Fed is going to be speaking at 2 o'clock, or making some sort of announcement on what they claim to. Well, they are speaking or saying something about issuing some statement about what they're going to do.
Remember that movie with Steve Martin where he plays a weatherman in Los Angeles, and it's called, I think, Welcome to L.A. or L.A. Sunset or L.A. something or other. And he puts his weather report on a loop. And they just play the loop every day, and when he's there, supposed to be doing the weather, he's out having fun with his friends. And then one day it actually rains, and he gets in trouble. But these Fed announcements, they can put it on a loop. Okay, I can tell you what they're going to say right now.
Okay, tell us.
Yeah, they're going to keep interest rates are going to be unchanged. And they're going to say that they're worried about inflation, but they don't see any problem right now, and there's no reason to raise rates, but they're going to keep an eye on it. And that's what they're going to say. So rates will stay the same, but they're going to make jawboning remarks about, they're going to flap their lips about the potential of a threat, and they're going to keep their eye on it, but they're not going to raise rates anytime soon, because this inflation thing, it's transitory, it's a mirage, it doesn't exist. You might be paying more for food and groceries, and you might be paying more for your rental car, but that's an illusion. Don't believe your eyes. Believe us at the Fed here. We know more, and that doesn't exist. There is no inflation. In fact, there's a threat of deflation. That's why we got to keep rates low. We might even have to lower them. That's right. We might even have to lower them, but we're never going to raise them. No, because there's no inflation.
Yeah, so that's the thing. That's why Paul Tudor Jones said this past week. Everybody was talking about it. His appearance on one of those channels. It might have been CNBC. And the thing is that he said the Fed's credibility is on the line, and he doesn't see how they're going to unwind it. So he was looking forward to this day today, right, to see what he's going to do next. At the moment, he's saying that the only thing I know for certain is I want 5% in gold, 5% in Bitcoin, 5% in cash, 5% in commodities. At this point in time, I don't know what I want to do with the other 80% until I see what the Fed is going to do. So he believes that the Fed will continue, as you say, same as usual, keep on printing more QE, despite, as he points out, the inflation, which is surging. He doesn't think it's temporary or transitory, as the Fed claims. He believes it's permanent, and that you could see these huge bubbles everywhere, boom times, and despite all of that, the Fed keeps on printing. Or he said if they indicate that if they mention that they are actually concerned about inflation, then it could send the markets tumbling, and they were tumbling before.
They will say they're concerned about inflation.
Okay,
but they won't change rates. Number one. Number two, when Paul Tudor Jones says, this is going to test the Fed's credibility, that's a bit disingenuous, because he has been saying, as well as other professionals like myself, that the Fed lost its credibility many, many years ago. Certainly under Ben Bernanke, he made that famous remark that they could raise rates in 15 minutes. They could drain it, balance sheet, whenever they want to. Meanwhile, the balance sheet's gone up to 8 or 9 trillion now, and it's set to increase by another 10 to 20 trillion. So I don't know what he's saying about credibility. They already lost their credibility. Now, importantly, he said that he raised his Bitcoin allocation from 1% to 5%. That's a 500% increase. That's exactly what we said when Paul Tudor Jones first announced his 1% allocation.
You did.
Within 6 months, he's going to raise that to 5% or higher. And this is a signal to the hedge fund market, the money management industry, everyone's got to take up their allocation now, because he's the alpha dog. He's the lead dog. You got to keep pace, at least with Paul Tudor Jones, to stay in business. You got Ray Dalio, I think, is still sitting on the fence. He's got to commit now, or just go. Just shut the door and go home. He's out of it. He's out of the game. If he doesn't want to be in the game, don't play the game. Go home. They're gonna say, oh, we're worried about inflation, like they do now for the last 10 years, but they will never raise rates. And Paul Tudor Jones will say, okay, well, now that they've spoken, I guess the decks are clear. I'm going to take a more aggressive inflation position.
And the butt hurt in the face of that guy, Aaron Ross Sorkin, who was doing this interview on CNBC. First of all, you can see on the screen grab here, you can't, but I can. It says, Paul Tudor Jones says margin requirements should be raised.
I've been saying that since I wrote a piece on Huffington Post about 16 years ago.
Yeah.
That said, look, you don't have to raise interest rates across the board, which would mean raising, let's say, mortgage rates and other types of rates. You know, the Fed, in their purview, have the ability to selectively raise rates. And what they should do is just raise margin rates, the rate of borrowing for speculative investment. The margin rates are now at all-time highs, higher than 1987, higher than 2008 by a huge factor. The leverage in the system has never been this high by a huge factor. And, you know, he's right that they should raise margin rates, but they won't. And they're going to keep the effective cost of borrowing for hedge funds and private equity and leveraged buyouts at zero, which means more companies can buy more companies with no cost. And they're not going to change anything. They're just going to, the bottom line after this meeting of the Fed, whatever today is, will be, like I said, Steve Martin doing the weather report in LA Story is the name of the movie. And they just put it on a loop. They've been playing that loop every 3 or 4 months for the last 10 years. There's no change in that loop.
There's no change in that loop. And yet, you know, this whole Fed speak notion and this like these bizarre press conferences they have to give in order to, you know, in a Wizard of Oz kind of way, that somehow they have some sort of control over the weather or over the markets, you know, is such absurdity. And when Aaron Ross Sorkin was pressing Paul Tudor Jones on like his Bitcoin position and what, you know, obviously Aaron Ross Sorkin is a huge cheerleader of the Fed and, you know, the interventionist policies and the Cantillon effect. So he's like really upset about this Paul Tudor Jones and his Bitcoin position. And Paul Tudor Jones said, I like investing in something that is reliable, consistent, honest, and 100% certain, which is the exact opposite of what the Fed is, right? They're dishonest, they're 100% uncertain, they're not reliable, and they're not consistent.
Right. Well, another synonym for the word certain would be guaranteed. And it's extremely rare in the investment business for any professional to use the word guarantee. And yet there it is, Paul Tudor Jones saying it's 100% certain or guaranteed, which is remarkable because no one ever says that because you open up a huge can of worms. But what he's saying, another way to look at it is that when you buy Bitcoin, you are trading off a little volatility for guaranteed with 100% certainty,
yes,
per Paul Tudor Jones,
yes,
an increase in purchasing power. Guaranteed over medium to long term. Obviously, on any given day, you have volatility, but that's a trade-off because you have guaranteed 100% certain increase in purchasing power versus the dollar, which has no volatility, and you're guaranteed 100% certain to lose purchasing power.